Hi, I'm Will, and we're going to talk about taxes today on the Geezer Guide to Better Living.
Hi, welcome to BPS Tax and Accounting Services, where we put our clients' interest first.
Alicia Barmer is a very good friend of mine. She's a very savvy businesswoman, and she has been doing my tax for years. She's a very busy CPA that really knows her stuff. That's why we kept getting interrupted during this interview.
You cannot, hold on. Can we use those as a tax write-off? Actually, you can. They do have to qualify. They have to meet certain specifications. And it's better to have, this will be a tax credit, not necessarily a tax deduction. A tax credit is better because it reduces the, uh, the, the tax that you're assessed on your taxable income. Okay. Now, as far as the appliances, it does have to have SEER ratings, which means Standard Energy Efficient ratings. You can check with the manufacturer that you're buying the appliances from. Okay. They need to give you a manufacturer certification statement. Okay. When they give you that, it has to be a certain standard. And it could be anything from a hot water tank heater, it can be the HVAC unit for the central air, central heat. Mm-hmm. It can be I want to say a geothermal heat pump, things of that nature. And
What about a commode?
Low flow toilets. That is a state credit that you will get. And just the same, it's beneficial because that actually adds money to your refund versus just reducing your taxable income. So that's a much better credit to take. So we'll take a look at that.
Thank you.
You're welcome.
Is there anything new we need to anticipate for this tax season?
There's always new things. New things come up every year. Just right off the top of my head, the one thing I know is that the IRS now has the capability to audit you going back 6 years, not just 3. So get a very good tax professional. Do not change up. Stick with the same person. Make sure you can find them year after year, like BPS Tax and Accounting Services. And people like me, we've taken the necessary course requirements needed to represent our clients before the IRS. If your tax professional cannot do that without you purchasing a audit protection service, then you may have the wrong tax professional. Another thing that is new this year is what's called, it's not really new, it's been out there, it's called the TRIP program. This relates to the tax refund debt offset, where they can take your refund to pay off child support, student loan, a medical bill, whatever's out there that someone can put against your Social Security number stating that you owe them a balance that they're not able to collect. It also applies to other state balances due that you may owe them. So for example, let's say you owe the state of Georgia $1,000, but you're going to get a $1,500 refund from the federal government. Well, what you need to know is that when you file your taxes, if you owe that $1,000, it's going to be reduced from your refund of $1,500. So you'll get the net of $500 as a refund. They will notify you. They always do. They also notify your tax professional when they do this. So just keep an eye out for things that may come in the mail.
Can I claim my niece or nephew on my tax return?
Yeah, you actually can. Now, there are certain rules and stipulations to it because, first of all, the parent always has priority to claim the dependent. So, with that being said, you need to make sure that the parent, A, does not have a higher adjusted gross income than you do, and 2, that you have the right per IRS guidelines to claim the child. For example, the child needs to live with you. They need to be related to you. That could be a niece, nephew, a brother, a little sister. Any of those guidelines would be sufficient. But they need to live with you for more than half a year. You need to provide more than 50% of their support, and you need to have documentation of this. And again, If the parent can claim them on their tax returns, you need to let the tax professional know so that we can advise you of something called the tiebreaker rule. Because this is what the IRS is going to use to determine who actually qualifies to claim the child. Another thing you want to do is the child has to be 19 years of age or under. They can be up to 24, but they need to be in college, and they need to have documentation that they're in college. They need to have maybe court documents, and the tax professional will need to make specific notes, and they'll go through their due diligence checklist to ask you the pertinent questions to make sure that you qualify for the credit, being that you're claiming a dependent who's not actually your son or daughter, but a niece or nephew.
How does the earned income credit works?
The earned income credit is one of the major benefits for a taxpayer. Reason being is that they get the refund based on the number of children and the adjusted gross income. For example, a lot of times people will ride around and you see these signs and they say $5,000, $10,000 per kid. That's not technically true at all. It is a marketing and advertising sign. They're just trying to get you into their facility. What you need to know, and it's easy for any taxpayer to do, is to go online and look at what their income and the number of children they have and how much earned income credit it will equate to. For example, number one, you need to have earned income. A lot of people, there's some people are self-employed and they don't understand why they don't get the highest of the high for earned income credit, because that's not technically earned income. We're talking about wages, things that have income taxes being withheld from a paycheck coming out of them. Do you get earned income credit with being a self-employed taxpayer? Yes, you do. You surely do. But there are other factors that affect how much earned income credit you're allowed to get. For example, if you are a single person and you have no children, did you know you still qualify for the earned income credit as long as your adjusted gross income it's under $14,820. If you have one child, 1 to 3 children, you'll still qualify for the earned income credit. Again, the factor is you have to have earned income. You have to have a valid Social Security number, and your children have to have a valid Social Security number. If you have a ITIN, you cannot get the earned income credit. You do not qualify. Your ITIN is just so that you are showing that you are paying taxes here in the States, not necessarily that you're going to get all of the benefits of having a regular Social Security number like any other taxpayer. Another thing, if you are under 25 years old and you have a dependent, let's say you're 23 years old and you have a child, if you do not have earned income credit, it's going to be limited, okay? Because you have to be a certain age to take these benefits.
The IRS has a program geared toward identity theft. What is that about?
I'm glad. This is basically the biggest issue we've had in the last 5 years, where people, Social Security numbers, I don't know where they're being found, but they're being used illegally to file false returns. It's even happening to children, okay? There's a program that they have. It's on their website. It's called Get an IP PIN. This is an identity protection number that you will need to file your tax return so that your taxes are not held up. It'll be processed faster. When you e-file, it does an automatic check to make sure that this number is in, and it will be associated with your Social Security number. For example, let's say you have a child who is being claimed by someone that shouldn't be claiming your child. Well, guess what? You need to get an identity protection PIN for that child from the IRS. Once you get that number, when you file your taxes, you'll give it to your tax professional, and they will put that PIN number in next to that particular dependent Social Security number. That way it doesn't stop you from getting your earned income credit or your child tax credit. Therefore, you get your refund faster.
How will the healthcare reform impact my 2015 taxes?
The marketplace insurance this year is a little bit more streamlined. Albeit people will tell you very different stories, but you can read the black and white for yourself. It is available, it's lengthy, and it's out there. The biggest thing you need to know is that there are different forms that you should and receive regarding your insurance. If you are covered by insurance, you're going to receive a 1095A if you got your insurance through the marketplace with the premium tax credits or advanced premium tax credits, and then you need that form along with your tax return so that they can reconcile the numbers to make sure that you paid enough, or to see if you need to, if they need to reduce it, which means you'll pay less. The other form is going to be a 1095B, and you will also get that from your insurer, and a 1095C, which you'll get from your employer. Sometimes you don't see these forms. If you get Medicaid and you know you've had Medicaid, Peach Care, any other CHIP program, if you have private insurance and you know you've had it all year long, on your W-2 from your employer, it's going to be a box, in box 12, it's going to be coded DD, and that will have an amount next to it. That is also proof that you had insurance. The question is, did you have insurance for the full 12 months of 2015? If you did not, then there is when the penalty applies. Now, there are some ways you can go in and apply for an exemption. If you're in a state where they didn't expand Medicaid and Medicare, or just basically Medicaid, if you are below the poverty level for your filing status. For example, if you're, let's say, single, your filing status threshold is 14,000, let's say 850. If your income is less than that, you automatically will qualify for an exemption. If you've gone through the marketplace and they determine that you do not qualify for insurance through the marketplace, you should have gotten an exemption from them, an exemption certificate. So just go back out there to the healthcare.gov website, look up the phone number, try to log back in, call them while you're logging in, and ask them, hey, how do I get my exemption for 2015? If you don't have an exemption, you didn't apply or file one in time, that's okay. Again, there are other parameters which we as tax professionals use to gauge whether or not you will qualify for an exemption. Yes, the credits are, they go up every year. Last year it was limited to $95 per person and $47.50 per child and 1%. This year it's all the way, it's way up. So with that being said, you don't want your refund to be reduced because of the healthcare tax penalty. This is something that has been mandated coming from the president, and you just have to abide by the rules. We're here to abide by the rules. We're here as tax professionals to help you be in compliance and keep you getting the most of your refund is what we want to do. We don't like to see people not get their refund because of lack of compliance. So anything that we can do to help, we're here for you to ask those questions. Again, I'm at BPS Tax and Accounting Services. My name is Alicia Balmer. Any questions that you have, if you want to email me, call me, that would be just fine. And you can also find us, just a quick Google search, BPS Tax and Accounting Services. Thank you.
April 15th will be here before you know it. You can always check with Alicia and her team, and they will steer you in the right direction to getting your tax taken care of. Thank you for watching.